The US has witnessed two back-to-back bank collapses recently. First was SVB and then Signature Bank. And now, Switzerland's second largest bank and world's eighth largest bank, Credit Suisse, is on the verge of collapse as well, it seems. This has obviously created panic among people because where are you going to keep your money? If your banks are not safe, then I don't know what's going to happen. India has been relatively sheltered from the shocks of this crisis. It is unlikely to impact India's banking system for now, but we are not strangers to banks falling. We have seen our fair share of banks falling in India too. But the question is, how did Credit Suisse situation got out of hand? In 2022, Credit Suisse was fined $2.1 million in a cocaine cash laundering case, and the mess just continued to get worse. Earlier this year, Credit Suisse announced significant layoffs and experienced its largest yearly loss since the 2008 financial crisis. After a major shareholder in the troubled Swiss bank indicated it would be unable to offer any more cash due to regulatory limitations, Credit Suisse share fell to a new all-time low. But the bank's shares recovered to some extent as it said that it would borrow up to $54 billion from the Swiss central bank. That's where our money is parked. Losses resulting from the collapse of investment funds, Archegos and Greensill Capital started the sell-off in Credit Suisse shares in 2021. About 8 months after being hired to turn around the falling bank, Antonio Horta Osorio resigned as the chairman in January 2022 due to a violation of COVID-19 regulations. Then in July of last year, Ulrich Kohner, a new CEO and a restructuring expert, launched a strategic review, but it was not well received by the investors. Customers also left the bank as a result of an unfounded rumor that the institution would fail in autumn. When the bank reported its largest annual loss of 7.29 billion Swiss francs since the financial crisis, Credit Suisse acknowledged last month that customer had withdrawn 110 billion Swiss francs in the fourth quarter. Credit Suisse asked investors for 4 billion Swiss francs in December last year. And also last year, Saudi Prince Mohammed bin Salman instructed the government-backed Saudi National Bank to invest 1.4 billion in Credit Suisse as a result of the rise in oil prices. The Saudi investment in Credit Suisse was designed to mark the country's grand entry into the global banking industry and solidify its burgeoning reputation as an oil-fueled powerhouse of investing. The largest lender in the kingdom by asset, the Saudi lender bought nearly 9.9% of Credit Suisse, but it now stands to lose about 1.17 billion on the deal. The bank's largest sponsor, Saudi National Bank, informed reporters that due to regulatory restrictions, it was unable to provide the bank with further funding, but expressed satisfaction with the turnaround plan. Founded way back in the year 1856, Credit Suisse shares are down 30% this year to date and have lost over 70% in the past year. So now imagine if such a situation arises in India. You're worried if your bank fails, you will lose all your money. Well, that might not be the case. For deposits opened with scheduled banks, the RBI's subsidiary DICGC, which is Deposit Insurance and Credit Guarantee Corporation, provides insurance coverage. The insurance scheme provides up to 5 lakh per bank and depositors in the event of bank collapse for cumulative bank deposits, which includes fixed deposit, your saving accounts, recurring deposits, and current accounts. Here, the DICGC coverage ensures both the interest and the principal components. Now, as the 5 lakh cover per bank per depositor applies separately to the deposits held in each bank, you can distribute your FD, investments, saving accounts, and other deposits across multiple banks in such a manner that their cumulative deposit with each bank do not exceed 5 lakh mark. This will ensure all deposits in different banks remain covered under the insurance.